Hey everybody, welcome back to another exciting video about taxes. This one's going to be a follow-up on the 7202 prep video that I did last week. And that was after, I say a lot of oohs and ums, I apologize about that. That Monday, I looked like Mr. Rogers with the sweater, and this is a no kids video. So I don't feel bad admitting that I was a little hungover. It was the day after the Super Bowl. And then the 7202 came out. So on top of it being a disappointing football game, I also indulged a little bit too much, and I was pretty much dragging that Monday. So I do apologize if I sounded a little dull and not as enthusiastic as I try and normally be. So let's just cover real quickly what this video is going to be about. This is going to be about the 7202, like I had mentioned. And I want to review a couple of things because I've been digging into it and I've been helping some people with it, and they've been struggling with a few concepts, and it is a little confusing. Some things can be a little confusing, so I want to review them. I want to review the credit with wages and self-employment income. What is that? What is net self-employment earnings? What are net self-employment earnings? And basically, that's a simple formula. So I'll go over that. I also want to address business losses. There's no net self-employment earnings if you have losses. So you're pretty much excluded. So for 2019, if you had losses, and then you had losses again in 2020, you're not going to be eligible for this credit. If you had losses in 2020, but had income in 2019, which is more likely the case given what we've been going through, you can use your 2019 net and self-employment earnings for this calculation. So keep that in mind, and I'll review that as well. What if you started your business in 2020 and you still had losses like everyone else did, and you just happened to be out of luck, and you started in 2020 and you had losses? You're out of luck. That's the sad reality of it. And that's really the disappointing feature of this tax credit and so many other credits that really didn't go far enough in helping the people that need it the most, really small startups, small businesses, independent contractors who may have launched their business late 2019, had no activity, and then in 2020, they're caught up in this mess. So that is an unfortunate part of this. And then just a quick kind of mini commercial for me. I just can't thank everybody enough for supporting me. I'm getting great comments and great feedback. And, the subscribers are growing little by little, which is wonderful. And I just wanted to discuss briefly what I'm going to be doing within the next couple of weeks. First of all, I'm going to be doing the ERTC PPP credit, which may not apply to a lot of the self-employed people. However, if you do convert from a self-employed individual to either a single member LLC, or usually for self-employed and you want to incorporate, there could be opportunities for you in the future. If you are a single member LLC and you incorporated in 2020, have not converted to an S Corp, there's a planning opportunity there potentially. So reach out to me or reach out to a local accountant in your area and discuss those potential opportunities to take advantage of some of these credits. So I'm going to be doing that. I'm also going to be doing a recap of the stimulus payment issue, the economic payments. The economic impact payments 1 and 2 we know are done. We're still waiting for a third round. I'm going to recap all that. I'm going to do a deep dive into who qualifies, who doesn't, and what we can expect and hope for once we get this final this resolution through, once we get it through Congress. And then, just lastly, again, I would just circle back. I do appreciate it. Please subscribe. I'm going to be doing this a lot in the next year. My business has been down 50%. I'm restructuring my whole entire business model. I'm going to be doing still taxes on a year-round basis and everything else, but I'm going to become more seasonal. So this YouTube channel, which I'm enjoying doing, helping people, I really want it to grow. So I really would appreciate your support in subscribing. I know you'll gain a lot of value. I'm going to be doing a lot of tax prep videos as well, so I can help you prepare your own tax form so you don't have to pay those additional fees to the software companies that promise you all this support and leave you hanging, because I get a lot of those calls as well. So there's two options. You can muddle through yourself, and I'll provide the resources to help you do that. And if it gets a little too complicated, you can reach out to me or a local accountant to help you. Okay, so with that, let's go into the actual deep dive of the form. So I'm going to start presenting. And this is just going to be a little bit of a recap of what I did last week. So let's see, it's coming up right now. All right, so I did a mock-up tax return, just a simple tax return. You can see the software, and I do apologize if the screen is a little small, but I have a Gene Smith here. Oops, I got to change that because I was playing around with the wages here. So let me change the wages real quick. And I'll show you why I did that in a second, but I just wanted to get back to where I was normally, where I have these other illustrations. So this is my software. It's an Intuit product, and it may or may not look similar to a TurboTax or something like that, but this is how I basically prove out my manual scribbly stuff and figure all that out. So let's go into the spreadsheet that I did last week, and I did a lot more examples this time. So I did it based on a family. If you were self-quarantining, so this is the credit, the family the credit, the 72 credit for yourself if you self-quarantined, if you were helping somebody else. And then there's a combo if you actually had self-employment earnings and some W-2, you got some W-2 qualified sick pay. And this was just an example of how this all maxes out. Sorry for the again, but last week I may have mentioned that generally speaking, you can't really coordinate the credit if you during the same time that you received sick pay if you had a W-2 job and you had self-employment income. So there's a little bit of an honor system there. So during that time, you can't double dip there. However, what I've noticed in terms of when I've been diving into these calculations, you could have self-quarantined. You could have had 2 different events. You could have had 3 different events because people have been self-quarantining all year and have had to do COVID tests multiple times of the year. So what you need to be careful in terms of documentation, not that you're going to get called out on it, but if you do, make sure you're not using the same period for this calculation for self-employment, for the self-employed credit. And if you're receiving a W-2, don't use the same dates. So just a word of caution on that. All right, so let's dive into, this is an example I had this morning, which was fantastic. Aaron, if you're out there, I really appreciate you calling and discussing your situation. So Erin, who lives on the East Coast, she said her accountant wasn't doing the 7202, that it was coming out zero, or just they weren't able to prepare it, and they told her that she didn't qualify for a credit. So she reached out to me, and I said, "Oh, let's walk through this example." I had a little bit of time before my phone call, my first call of the morning. So she did. She reached out. So single mom, and only self-employment income, no W-2, no nothing. So I won't mention the service or anything else, but basic service. And she lost money. She barely made any money in 2020. She's struggling. But in 2019, she had $12,901 of self-employment earnings. In her case, because she was caring for her son, she's eligible to take up to 50 days of the care, and you have to go through the 7202 instructions to make sure you qualify there. Where did it go? I'll find it. I'm sorry. So, it says it right here. Enter the number of days you were unable to perform services as self-employed individual because of certain coronavirus related you provided to a son or daughter whose school or place of business. Let me get this bigger. Let's play. School or whose childcare provider is unavailable for reasons related to COVID-19. So whose school or place of care is closed. So many parents have had to deal with this. So if you're self-employed and you have to deal with it, you could be eligible for up to 50 days of that credit. So when I was talking to Erin, Let me get here. So I said, okay, that's 50 days. And we do the math, simple math. It's just, it lays right out. It turns out that she's eligible for $1,700 that her preparer basically said, she couldn't figure it out or wasn't eligible for. So anyway, thank you for bringing that to my attention this morning. Hopefully that helped you. And she's going to reach out to me to confirm what the final result's going to be there. So let's continue now. So that's this example. So that's Aaron's example. So basically, actually, no, that's not Aaron's example. It's a different example. So now I did, we'll do 901 and let's do this. Yes, that's right. So then that is correct. So 12901, sorry, again, doing this on the fly sometimes and I'm changing results left and right. Low budget production. I try and do one take on this stuff because I'm super busy as well. So I do apologize. But that's basically how it lays out. There's some rounding errors. So that's the difference there. So in her case, you just follow the logic, number of days 50, self-employed. Point about self-employed I was going to mention. What are net self-employment earnings? Net self-employment earnings are basically, if you have to go to schedule, this gets a little confusing, but in the tax return, if you're going to use your 2019 numbers in your prior tax return, if you're self-employed, you're going to go to Schedule SC. And the net self-employment earnings, so it's the Schedule SE, all that is 92.35% of your net profit, right? So if your net profit is $10,000, this is what it's going to be, your net profit. So net profit is going to be 10,000. I'm sorry, net profit right here, tentative profit line 29. And that's going to go on to Schedule SC. All right. And you're going to take 92.35% of that. Those are your net self-employment earnings. Okay. So that's how that works. So in Aaron's case, it was 12,901, and we follow the logic all the way down, multiply by 0.67, divide 12,901 by 260, and then multiply that by 0.67 and so on and so forth. Okay. Because you're limited to, that $200 a day limit. In her case, it was, basically $33, $34 a day times 50 gives you that total. Okay. And that's my formula there. So let's say you're just doing it for yourself. We'll just run through these examples very basically. So you're doing it for yourself, and almost everyone who's quarantined has had to be laid up for 10 days, right? So we're going to say 10 days. Again, let's see if I can maximize this. Oops. And 10 days, these are the confusing, enter the smaller of line 1 or 3. I covered this in the last time. The smaller of line 1 or 3, they're the same number. So just put the same number in there. And then you do subtract line 4 from line 3. So you're going to do 10 minus 10, which is 0. And enter the smaller of line 2 or 5. Okay, 0. And then here's the net self-employment earnings. We talked about that. So 12,901. Then you're going to divide that on line 8 by 260 to get 4962. And then it says, so it really steps it out. I don't have to go through this line by line. It really steps it out, and you just kind of follow the math. Now here, there's like a dual calculation scenario going on here, because in case you had 5 and 5 here, it's a different rate. It's 511 per day maximum. If it's just you, it's 200 a day maximum if you're caring for somebody else. It could be a parent, a relative, whoever, right? So it's a different calculation. So it kind of runs it kind of runs simultaneously. So, and then you do the math, and it says, this is what it would be if you did have, your earnings, your 260 day earnings. This is what it would be if it was based off of the $200 limit. But in this case, it's not. So we're going to multiply 6 by 12. 6 times 12. A 0 times anything else is always a 0. So you just don't forget that. and then add lines 10 and 13. So 10 and 13, it's 0 because there's no caring for anybody else. So that's your credit. Okay, 496 in this scenario. So if Erin didn't if she didn't have to stay at home and the school was closed and everything else, she might be entitled to this. She would be, not might. She would be entitled to the 496 instead of the 1700. It drops a little bit because now I changed the dynamic. Now I'm saying the 10 days are to care for somebody else. So it changes because obviously it's a lower multiple. The multiple now is $33 because we're basing it off of 67% of the daily rate, subject to the $200 maximum for caring for somebody else. So in this case, it's $332. And then let's throw a wrench into the equation. And this is the interesting part. This is what I talked about briefly in the intro. You can run these. You can have both of these credits. It's just the timing of them. So in this case, I'm running it based off of you cared for somebody else, but you also on your W-2, your employer reported that they also paid you $520 of sick pay. It doesn't change the results. It's actually it's going to be the same result. The reason why is because, and it's there, but the total sick pay you get from a W-2, and if you had part-time income as an independent contractor, you're subject still to either the 5110, which is 511 times 10, 5110 for in total, you're capped out, or 2,000 if you were caring for somebody else. In this case, you had 520 from your employer, which is fine, but you're still eligible to take that 332 for the time that was not running concurrently with the time you were getting the sick pay with. So that's an interesting thing, and just keep that in mind that you're not going to be penalized if you had two different events, one that happened while you were working and another that may have happened while you just simply self-employed, and they just don't combine those days. And then I just kind of went off the charts and I said, well, what if my wages are a lot higher? What if my net self-employment earnings are actually, didn't do the calculation, times 0.9235. Okay. And gross. So we have that. But then we also had, some W-2 earnings I'm sorry, my bad. Let's say Erin also had a job and she earned 150,000 of wages. And then she earned 12,901. We're going to use her 2019 because let's say, the side income was just terrible and it wasn't working out. Well, and then she had $150,000 in wages divided by 260 days. So her daily rate is 576, but the limit is 511. Okay, and this is assuming that she's caring for herself. So we're going to put that 5110 right there. And again, continue with the instructions and the formulas here. So the combined is going to be 496 plus 510 at the 5606, but we're limited to 5110. We're unable to take that difference. So when you combine the two, you cannot exceed the limit, the annual limit of 5110 or 2,000. So just keep that in mind. So that's basically it as far as, a quick rundown of these calculations. Try not to get too tripped up. Let me know if you have any questions or comments. I'm happy to answer them. If they're really technical, just reach out to me and I'm happy to answer them. Again, I'm going to leave you here. Otherwise, I'll keep talking because I'm just having a lot more coffee. Reach out. Please subscribe, really helps me trying to build this channel and provide you with a lot more of these tax prep quick update videos as I can. So, all right, thanks again. I will see you likely tomorrow when I do the update on the economic impact payments and summarize where we're at with all that. All right, thanks again.